Welcome to Young and Finch, the podcast created by Korean millennials. This week's topic, we're going to be discussing personal finance. That includes investments, savings, loans, budgeting, all that stuff. So as the famous Andrew says, let's just get into it.
Waste no time. That's what I hate.
Sup, guys.
Sup. Man, stressful. Real estate is stressful.
Yeah. The stock market is stressful these days.
Everything is stressful.
Yeah.
Sorry.
All right. So, let's just jump right into it. When did you guys start investing and how did you guys get into it?
Well, not so much investing specifically, right? It's just about personal finance.
True.
But I've been always interested in saving ever since university. Well, yeah, that, and I was also a very frugal person to begin with. I like to splurge here and there, like everyone else. But generally speaking, I think I'm pretty frugal, where I don't care a lot about the extra, things that other people might care for, such as traveling or like food or like drinking, right? I like all those things too, but I'm not going out of my way to spend money on it.
True.
I think, like, I don't really care for traveling. The only time I traveled, I only traveled like maybe a handful of times. And like food wise, I'm okay with, spending a little less, because as long as I get the nutrients that I look for, I think it's good. But again, some days I like to splurge. So yeah, that's just like a general
background
about myself. I'll
true.
get into it more, but yeah. How about you guys?
Well, for me, I got into stock market like kind of close to end of last year, and what kind of got me started was I read my first like financial book, Rich Dad Poor Dad by Robert Kiyosaki, and then that just kind of taught me about like cash flow and assets and liabilities and things like that, and and then I saw you guys and also my friends started getting into the stock market, and I think that was a big influence on how I got into it too.
Yeah, I think the world climate also affected that as well. I think people in North America just had random money coming in with the what do you call it? The CERB and the
stimulus checks
and stuff, and so people were just pumping that free money into the stock market. I think a lot of people got into it in the past year. But cool, yeah, same. I think it's safe to say we're all fairly new to the, at least in terms of investments. I think we're all fairly new to it.
Yeah.
Actually, no, I invested 2 years ago. Started.
So you're an expert?
I'm not an expert, but I'm not a noob.
All right, so we got Warren Buffett here. This week's guest is Warren Buffett. Sorry,
I've been doing it for 2 years, so I wouldn't say I'm a noob.
How many Coke shares do you own?
What the? No, but
that's good though.
I try to get into investing as soon as possible. I think once I paid off my student debt, I splurged on this jacket, and then after that, I saved up to buy stocks, which I did 22 years ago.
True.
But that's when my investing, I guess, technically started, and I got more.
What was your first stock you bought?
Probably Vanguard, VOO.
Yeah.
Okay.
The ETF. And then I, gambled here and there on like individual stocks that I thought would do well.
True.
And I don't know, I think my return on total returns up until now, it was pretty good.
Yeah.
So
I would say so too.
Yeah. Well, to be fair, I'm not saying your investments are bad, but you probably got a good amount return starting from March of last year. Same with anybody.
Same with yeah.
I think that's yeah, if people had the opportunity to invest during the pandemic started, when the pandemic started, then yeah, I
Yeah.
mean, it's
Perfect time to buy when the pandemic started.
Yeah.
Mm-hmm.
The thing is, some smart people took out their money before it hit, like not before it hit, before it like spread,
Yeah.
like wildfire.
Before it tanked.
Yeah,
Yeah.
but what I did, I wasn't smart enough, so I kind of left it in there. But what I would do is try to invest all like probably 90% of what I make, because I was staying at home, right,
Yeah.
into the stock market, and then I think I made money off of that.
Why are you saying it's a smart thing to sell or to sell your positions?
Sell high, buy low.
I never said sell.
But didn't you say people pulled out when the market tanked?
Like just before.
Yeah, just before.
So they were able to
okay, gotcha.
realize their gains and then buy
Yeah,
back
yeah,
in
yeah.
once
Yeah,
once
yeah.
everything's at like
Yeah.
cents on the dollar.
Yeah. Okay.
Yeah.
Yeah. Hindsight is 2020, bro.
Yeah, I mean,
if
I'm
I
not-
knew that shit was gonna happen, I would have bought Tesla as soon as COVID hit.
Yeah,
Yeah.
exactly. I mean,
Tesla,
You
bro.
li-
You should
live
have
and
bought
you learn.
GME then at $4 a share, and then you'll be a millionaire by
bro,
now.
you should have bought Bitcoin then back in 2012 if we're continuing on that subject.
I should have bought a
Yeah.
house in 2008. Sorry. Sorry, yeah, we're not laughing at the the housing market crash or anything. Yeah, it's true. So, like, what was your guys' like, what got you guys into investing? Because I think there's like a certain point when you hit like an age or a point in your career and stuff where you're kind of like, you realize that leaving your money in your savings account and shit is you're losing money, right? So what
Yeah.
got you guys kind of interested in and peaked into wanting to look into investing, not only in stocks but in general?
I think for me, it's like, I think it's pretty like easy to just get a lot of things like from internet nowadays, like Instagram and things like that. You see all these pages talking about like income and like I think it's pretty general knowledge that you should try to aim to have multiple streams of income. For me to do that, like you need to have some sort of other income other than your main source of income from work. So, I started thinking like, oh, how can I start,
Yeah.
being able to start multiple sources of income, and you start kind of looking into, you start doing your research, you start reading about books, and I guess that's just how I began. It's like I just wanted to, strive to have a better life. I think that's a lot of people do that, is that they're not greedy enough, they're too lazy, and they don't strive to like they don't strive to have for more. And I mean, it's just some people. So I say this all the time. Some people just. I mean, it's cool if that's not your objective in life, but it's like for me, like I want to live a pretty good life, And to do that, you need to have multiple sources of income. Unfortunately, that's just part of life.
It's true.
But that's where you talked about the 4 happiness, like factors of happiness in life, and financial is definitely up there.
For sure.
Oh, good life point, eh? I think for me, I just got into investing naturally. I think once I started working full time and I paid off my debt, it's like you come to a point where you have money coming in, and like you said, you don't know if you just leave it in your bank account, it's just kind of wasting money. So obviously the next thing is to go into investing. And naturally, I've worked with people, thankfully, that knew a little bit about the stock market. I got a coworker that actually recommended some stocks, which one of them was BOO.
Yeah.
And yeah, I think if you work in like a financial institution or just people that are in the similar field as you, for me actually specifically, I don't know about healthcare or like engineering, but like somewhere in like software finance, a lot of people have like same interests as you. Like even with my new job right now, I asked people about investment opportunities, investment strategies and whatnot, and a lot of them are willing to help me, right? So I just kind of ask a lot of questions and trying to get more information. But
Yeah.
yeah, just I guess the point where I thought, what can I do with this money that I'm not spending, was the realization where I started looking into different avenues of investments and just personal finance in general.
Yeah.
Yeah.
No, I agree. I think what Brian said about creating multiple streams of revenue, but I mean, like having your money work for you is essentially the goal, right? I think for me, like the biggest point was like everyone knows about inflation, and like I think it didn't really hit me until like uni, where like I kind of realized what inflation actually meant. And so like every year that passes, my dollar holds less and less weight and less value. So in order to keep up with the changing of times, you really need to have that money growing. So I don't, yeah, like that alongside with COVID that hit, and then watching a lot of Graham Stephan on YouTube really kind of piqued my interest to grow and to start investing. I think it's just good for like long term as well,
Mm-hmm.
I think being financially like literate is huge, and I think that's just a huge flaw that the education system nowadays hold. And when you go to high school, you learn about parabolas and Shakespeare or whatever, which I think is like, it could be useful if you're going into that field, like if you're becoming engineering.
Straight facts, it's not.
Yeah, but they don't really talk about, I guess you do have like basic accounting class, but you don't talk about like the stock markets or
like data management,
whatever that or all these different terms like assets and liability. Well, I guess you learn about those, but you guys know what I mean,
Yeah, you don't really learn about taxing.
Yeah,
you don't learn
taxes,
about taxes.
yeah.
You don't learn about like saving, like
Yeah.
how like
I think you could just umbrella that term, saying like school teaches you a lot of theoretical and abstract type of beat.
not a lot of practical things.
Yeah, but not a lot of practice. Like the shit that I use for my job, I don't use. I maybe use like 5% of what I learned in school.
Yeah.
Right.
Yeah.
I think a lot of like practical shit comes from on the like just living life.
Yeah.
You know what I'm saying?
But I think that like pertains to why a lot of people don't invest and aren't financially literate or competent, because they haven't had the opportunity to learn that, and they don't go out of their way, like Brian said, like they're comfortable, they just throw everything in their savings account and they're like, yeah, like it's good, I'm not worrying about that. But I think that kind of like not ignorance, but I guess like naivety makes people lose out on a lot of good opportunities to grow their wealth.
Yeah, it's kind of sad, to be honest, because actually I don't know. It's not sad. What am I saying?
Yeah.
It's just it's their loss.
Yeah. That's the big difference between like wealthy people and like the middle class and the lower income class, is the lack of financial literacy. All the rich people know how to get away, with taxes, and, they know more about the stock market, and it just comes to show like the more effort you put in, like the more reward you're going to get. But some people just don't want to put in that time and time to learn and develop these things.
Capitalism.
Yeah.
Those are the people that probably wants the government to distribute the income level. I'm like,
well, not everybody. I'm sure everyone.
I'm sure.
I look at some people and they work really hard to provide food on the table. Yeah. But I mean, we're definitely blessed to have like the time and opportunity to like learn about these things, Because some people, I can see why some. I don't know.
I don't know if the word blessed is good. I think it's good that we went out of our way and looked for these opportunities.
Mm-hmm.
Right.
But how some people are not in that situation. Like let's say like if they have problems in their family or in their household.
Oh, I know that sucks.
They don't have
that
a job.
Sucks. Yeah,
Yeah.
for sure.
Yeah.
But
Yeah.
I'm just saying there's a lot of people in our situation that don't know finances as well.
Yeah. That's
So I want to call it a blessing per se. I would just say good for you,
Yeah, true.
Yeah. But like Brian said, I think the time that we live in, where we can just search up what is TFSA or like taxing on capital gains, Google, and then you can find out everything. It's like, We have all the information available to us. Watch 3 gram Stefan videos. Bro, you're fucking genius. Like, you have no excuse, I think, at this point, if you are a working young professional and you're not financially literate. Like, you have no excuse.
It's like it's your own fault if you lose out, is what I'm trying to say.
Yeah.
More so than the whole
for sure
blessing part, because like you guys said, there's a lot of resources out there, right?
I think like if you are the ones that are listening to this and are not like kind of engaged in the investing or things like that, I think we're all trying to get to the point where we're trying to say like start now, because the more, like, you guys have heard the phrase, like, the longer time you spend in the stock market is
The
better
sooner
than
you start, the better.
yeah,
it is.
yeah, exactly. So
yeah. I mean, I'm sure everyone here likes to make money. I'm sure everyone wants to grow their net worth. So yeah, just live a little bit more frugally, and hopefully everyone can reap the benefits.
yes, sir.
yeah.
Anyways,
In terms of on this topic, while we're staying on the topic of stocks and the stock market, in terms of the investing style, how would you describe your guys' investment style? Like, are you guys buying into high growth, companies with a lot of growing potential? Are you investing in a lot of ETFs, more stable stocks and bonds and stuff like that?
I feel like we should explain.
Yeah, I don't know. I don't think a lot of people know what ETFs are, or like indexes are.
Okay.
So ETFs are basically a bunch of stocks put into one stock. So they take bits and pieces so that it's diversified, which means that there's lower risks, but there's also a smaller growth rate, right? That's how usually it works in like financial
Depending
instruments.
on like what kind of holdings they have. Yeah.
Yeah. So like the higher the risk, the higher the rewards, but you could obviously lose out on the money. But so I guess to Josh's question, I'm pretty risk averse.
Yeah.
I invest mostly on ETFs, specifically Vanguard, because I know they're well known, and just like looking at their history, you could kind of tell that they're always growing long term. And then I think I don't know if it was Dave Ramsey or Graham Stephan, but they said that.
You sure if it wasn't Gordon Ramsay?
Or Gordon, what the?
An idiot.
Yeah, he told me
sandwich.
Yeah, he told me how to cook a sandwich. Sorry, no, but they said to invest like 10% of your portfolio into risky stocks, right? Oh no, sorry, it was Kevin O'Leary. I remember it was Kevin O'Leary.
Into speculative stocks?
Kevin O'Leary.
Yeah, like speculative stocks,
Yeah.
but I can't even do that.
Yeah.
I'm pretty I probably put like 5% maybe of my entire portfolio,
Yeah.
and I think like specific stocks I remember were Tesla, Neo. I think I remember investing a long time ago, and like Six Flags was one of my big ones during the pandemic, actually. And yeah, I made pretty good returns on those. And yeah, but like I said, majority of my assets are in ETFs. But I'm trying to like transition into real estate. The feels. Sorry.
Yeah, I would say I'm along the same wavelength. I'm pretty risk averse. A lot of my holdings are intended for like long term, so there's a lot of stable Canadian stocks, and then a couple more, I guess, like high growth potential like tech stocks, but pretty risk averse.
I think if you're starting off, I think you should probably just go off with ETFs. I think that's what I did, and just kind of dip your toes in the water by starting off with ETF, and then just kind of figure out how it works, and then you just kind of check the market every day to see how the market is doing, and then that way you just have more knowledge about how things work, and that way you can start investing in individual stocks. I think, which is definitely a bit more riskier, but I'm in the same vibrations as you guys. I'm going for long term, so I own a bunch of like tech stocks and big companies. But I do like to have fun and do have some like speculative stocks too.
Yeah.
True.
All right.
Yeah, I think investing in stocks is a really good first step to investing and just understanding that there's different avenues to make money.
Yeah.
That's how I started out, actually. Before I invested, I had like no idea of personal finance. All right, so to anyone listening,
Yeah, I
start
agree.
with
And
stocks.
Yeah, for sure. I agree. And like I think with like the different types of brokerage systems you can use now, like Questrade and Wealthsimple, it's like it's super easy. Like if you don't want to be spending like a ton of money on like commission fees and stuff, you know, you can get something like Wealthsimple, like the equivalent of the Robinhood, but for Canada. And that's great for Canadian stocks, I think, to start out, just to play around with like maybe a couple $100 just to test the waters. Yeah, there's definitely like it's a lot more approachable now than it's been, I think, even 5 years ago. Because I opened my first brokerage account around 5 years ago, and I was like so confused in the interface. And I remember like the person at the bank like told me, like explained like, okay, like don't do these kinds of options, and like don't select this when you're buying and stuff like that. But now you just load up $100 and you buy, you know, 10 shares of whatever, and you sell it a couple of days later. It's like super convenient.
Yeah. But you don't want to do that.
But you don't want to.
If you're going for long
Yeah,
term.
no, for sure. But I think if you're starting out, like I think it's okay to, like you said, dip your toes in. Just get started.
Yeah.
Yeah.
Just buy one share of Apple and see what happens in a month.
Yeah, yeah.
It'll probably have gone up like $10.
Or down after the
down.
quarterly
Yeah, or down.
quarterly earnings report. Fucking
Yeah.
yeah.
Anyways.
Any last words on stocks and the stock market? The one thing I would say is if you are thinking of looking into it and starting, do your research.
Yeah.
Definitely do your research. Put in the time.
Sounds cliche, but do it.
Definitely do it. And understand that no matter how stable a stock can be or a company can seem, you can always lose money, and you're always at a risk to lose money. That's the fact of investing. So if you're able to accept that, then I think you can move on to actually starting.
Yeah.
Yeah. There's always a risk of losing money, but I think the risk of gaining money is far more substantial than keeping your money in a savings account in your bank.
Yeah,
Is
I
all mean.
agree. Because if you look at like what average is like 7 to 10% in the stock market, right? Depending on what you're
Yeah.
like what you're invested in, but inflation in Canada, I think, was 3% last year or something like that. So
Yeah, and then you keep that in your savings account. Let's say you get like 1%, which is just barely keeps up with inflation. So it's really no point in keeping it
Yeah.
in your bank.
yeah. All right.
But that doesn't mean take everything out. You should definitely keep some emergency funds in your bank.
Yeah, for sure.
Do it
But
smart.
that's
Do it
that's
smart.
my approach. Yeah.
Should we just segue right into income and savings then, since we're talking about savings anyways?
Let's do real estate
Yeah.
at the end.
Yeah, I'm done. Do you guys have an emergency fund?
No. I don't.
Really?
Like my emergency fund is just, actually, I guess I technically do.
Like you're not sitting on like a
I
bit of
am
cash
right now.
in like a savings account.
Yeah.
Yeah.
But I might use it because I'm trying to invest in real estate. So
Yeah.
technically no.
Yeah, I have some sitting on my account too. Just in case
Yeah.
something happens, you know. You never know.
I agree.
I try to hold like 3 to 5 months of just your monthly
Yeah, I
expenses
heard
just to be
rule of
safe.
thumb is to have around 6 months expenses, you know, covering rent, food, everything, as an emergency fund. Again, depending on your lifestyle, that could be 5K, that could be 10K, that could be 20K, right? But
But like technically, can't you just invest that and then take it out whenever you need it?
yeah, but I think the idea with the emergency fund is because it can take time to withdraw money from a brokerage account.
Just
Right?
use a credit card.
Yes, you can use credit cards as well, right?
You could, but what if you don't want to shave your position? You know,
I
That's
mean,
also
if
another thing.
if it's an emergency, I'm sure. it's
Yeah,
okay.
like, but what if it's like, like, what if you need the cash? I think is the circumstance, right?
Credit card.
No, like cash, like, you know, in a situation that doesn't accept credit. I don't know.
What are?
I mean, Andrew, you could certainly do that, but it's just an emergency fund, right?
No, I'm not saying I do that. I'm just saying, why can't we? Like, I don't get why we need cash. It's 21st century.
You could, but it's just for sakes of having
Like
cash
again, I
available
think
at hand.
everyone. This is a good example because everyone has a different way of approaching it.
Yeah.
I'm on the same wavelength where I do have an emergency fund, and before I added any money to investments, before I started paying off any debts that I had, I prioritized making sure I had that emergency fund in case something like COVID happens again, where I lose my job and I don't have an income, or some market crashes and everything gets really crazy. I think it's nice for my own personal, even mental health, just to be sitting on a bit of cash so that I feel a little more secure in case something happens. If it's a family emergency or something like that, it's nice to have that buffer, right?
True. Yeah.
Yeah.
I guess.
Yeah.
But yeah, so you don't have, so you don't have any emergency fund then?
No. So obviously, rent wise, I would have for each month. But like, let's say I lose my job and I have to pay rent for the next 3-4 months.
Yeah.
Then I'm gonna take out money then, because each month I always have the rent amount prepared.
Right.
But I think you could get away with using your credit card and waiting for the money for a couple days.
Yeah.
And having to reap the benefits of just investing that. But I mean, you each to each their own, right? That's how I do it.
No, for sure. And yeah. And like that is the smarter thing to do, right? Like, why wouldn't you want to put more of your money into an investment so that you're earning more of that back? So conceptually, I agree. Like that's the smarter thing to do. And if you're like willing to do that, I would say that, like, I wish I could do that, but I can't. Sorry. With respect to income and savings and stuff, if we're looking at our net value, like, you're not positive net value till you paid off your debts. How'd you guys deal with student loans? Any debts that you guys might have had it after graduating?
I had debt. I had student loan debt. So I hate to be in debt just personally. It's something that is always in the back of my head. So once I graduated and started working, I think the good thing, like, it was actually coincidentally when I went to New York, and for the first 5 months, it was like I was alone for a lot of the time because it was kind of hard to meet people outside of work for the first 5 months. So I actually just saved a lot and paid off really aggressively.
Yeah.
I think I paid off like 30 something thousand in less than 5 months.
Damn.
Yeah.
Yeah, that's aggressive.
Oh, sorry, not 30,000, 18,000.
Oh, I was gonna say 30,000 5 months,
Yeah.
bro. That's like, that's crazy.
18,000. Sorry, it was 18,000.
Yeah.
Still good. Still a lot though.
It's still good.
Yeah.
So you're throwing like most of your salary into it. Yeah,
pretty much. That's why after I paid it off, I kind of bought myself like a really expensive jacket
to treat yourself. No, 100%. You need that too, right? You got to treat yourself a little bit.
So, yeah, now I'm like debt free. But like I said, I'm trying to get into real estate, so I might be again in debt. But we'll see. That's
a good type of debt though.
Yeah.
Brian, what about you?
Well, for me, I was fortunate enough to, I did have OSAP, which is student debt, but I was fortunate enough to have my parents cover that expense as I graduated. But once I got a job, I'm paying them back monthly as like, I guess my, repayment of debt to them. But that way, at least I don't have to pay extra on interest and things like that. So, and it's nice to pay them back and, give them back what you earn. And, it's like a feeling of, what's the word, allowance and like passive income for them. And for them, I guess it's like, oh, like you're finally working. So it's just a nice feeling to give them some portion of your income.
They're like knocking on your door. They're like, "Where's my money?"
Nah, I usually just send it.
No, I'm just kidding.
Yeah.
I'm just kidding, bro.
Why so serious,
No, I'm
bro?
playing. Yeah, no, I feel you though, and that's definitely a huge blessing because while I feel like a lot of people probably have that have their parents do the same thing, right? They'll cover the OSAP loan and then they just pay them back after.
Right.
I think that's a huge blessing because I would like to say that a lot of families don't have that opportunity and have to lean heavily on OSAP and then have to pay that back after, including interest. So that's a nightmare in itself.
Mm-hmm.
Yeah, it's definitely a blessing.
Yeah, I'm actually still paying back my OSAP because after graduation, I took a bit of time off to try out different things, and so I didn't start working a full-time job right away. And then once COVID hit, we had they suspended OSAP paybacks and no interest. So I was like, why not save some money and not pay that back yet? So I was kind of just chilling last year. But once the payments started rolling out again, right now I'm just doing like the minimum monthlies. And like I said, with the having the financial buffer, having emergency fund, because I'm risk averse, I don't want to be paying too aggressively, leaving myself with nothing at the end, even with the financial buffer. So what my approach with paying back student debt, while I know that it's best practice to pay it off as soon as you can to minimize the amount of extra interest you're paying, my approach right now is to pay the minimum and then pay lump sums when I can, and hopefully chop it down within.
How much is the interest rate?
Right now, I think it's for federal. I think it's like 3.2%, and then for provincial, I think it's like 2.7, something like that.
So it's like 7% ish.
5%.
Yeah,
5%.
It's like around 5-6%, something like that altogether. Which again, it doesn't seem like a lot, but if you're looking at a $50,000 loan, it definitely adds up. So
yeah,
I would like to pay more aggressively, but again, I think everyone has their own approach to finances and dealing with debt and investments, and my approach is just being a little more safe, holding on to a little more cash, maybe putting a little more of that money into investments, because like if I can, instead of paying an extra $1,000 a month or something for OSAP, if I put that into investments, technically I should be offsetting any extra additional interest I'm paying for my loan, right? So but yeah, definitely I can't wait to be debt free, bro.
You're never debt free, bro.
That's why you gotta be. That's why you gotta be a rich, bro. And that's why we're doing these videos.
Unless
right?
you're rich.
Nah, bro, I don't want to be rich. I want to be wealthy.
Yeah, for sure. That's same thing, isn't it?
I think it's a little different. Wealthy is like, it's like what you're saying. It's when you're wealthy, I think when you're like not working and your money's working for you, and you know what I mean? But being rich is like, you're a millionaire, you're rich, but you're working. You know what I mean? Like, I don't want to be working. I want my money to work for me. I want to have a yacht.
I want to still work even when I'm wealthy.
Actually, that's true. I want us to keep working too.
You're gonna develop Alzheimer's, bro, if you stop working.
Damn. Why you gotta do me like that, bro?
That's what happens to people when they retire too early, bro. They get way too bored.
Yeah.
And they don't have anything else to do, But the thing about being financially free is you get to do whatever you want, If you want to just take a day off, then just take a day off, or you don't have to worry about, how am I going to pay my bills next month?
Yeah, how am I going to pay for my fucking kids' soccer practice and shit?
Yeah, exactly. That's the dream, bro. It's not about money. It's about that
freedom,
identity of being able to do whatever you want, That's what I'm striving for,
Freedom boy, there.
가자 그럼.
Call me freedom fighter.
For any students that might be listening, would you guys have any final thoughts, last words with regards to dealing with personal finance and stuff like that?
When you get your OSAP, don't spend it on stupid shit.
Really? I was gonna say, like,
that's facts.
Actually, yeah, that's true. That's the smart way.
Because that's not your money. That's the money you're gonna have to eventually pay back plus the interest. But I mean, it's harder said than done, because when you're in university, you want to have fun and things, right? But be smart about it, because that's money that you're going to eventually have to work your ass off to pay back.
Yeah.
And you rather, you're a little, like if you're in your 10s and 20s, like a little bit of sacrifice you need to do, because the little bit of sacrifice that you do now is going to pay like
Pays the price.
years down the road.
Pay
like years down
dividends.
the
They're
road.
gonna pay,
Yeah, it's gonna pay dividends in your life in the future.
Pay the
bro.
price like
Sick.
hustle, right?
Yeah, man.
No, I was gonna say it's kind of hard because I just spent whatever I want in university,
Yeah, same.
so I can't really say that. But like, obviously, what you said is correct. You gotta be smart with your money. But I don't think students are gonna be like, "Oh yeah, this guy said like be smart with my money, so I should save it."
Yeah.
Yeah,
Like, if you
yeah.
can do that, because
Yeah, exactly.
again, engineering tuition, it's fucking now I think it's probably upwards to like 9K a term, right? So that shit swallowed up most of my OSAP anyway. So if you can save it, definitely save it. It's a huge tip.
I would give a tip of trying to find grants and like scholarships that you could work
Yeah.
towards
Mm-hmm.
more so than try to save. Because I don't think students have the mindset of saving, but I would just
But they should.
they should for sure.
Yeah.
But they don't.
I mean, I think that's
know what I
subjective.
mean?
I'm sure there are students that do want to save it.
I'm sure there are, but most I would say most of them don't.
True. Okay, well,
Honestly.
take it with a grain of salt, because I'm just saying down the road you're gonna have to pay all that back.
Yeah, no,
That's
I'm
facts.
not disagreeing. I agree with your point. I'm just saying, it's times are different. Sorry. Anyways,
True.
Yeah. Valid points. One thing I would like to add is, I didn't utilize my credit card very smartly. And so I don't even think smartly is a word, but I didn't use my credit card very efficiently during uni. I was scared of debt, even, holding on to like a couple $100 of like credit card debt, like temporarily for the month or whatever. I was scared of it. So, I barely used my credit card. And that's why my credit score was fucking like 600s during uni. And so like one thing I would say is use your credit card, man. Like just use it, pay it off, build your credit up early. And again, it all comes back to financial literacy and competency, right? It's like having a good credit score isn't going to do much for you in your early 20s, but building that up in the meantime will be great once you need it when you're like in your late 20s or your 30s, but without doing that, you're gonna have to start from scratch when you graduate, and that's a fucking headache in itself. So I would say start utilizing that, be smart with that,
yeah, that's a great tip.
Yeah.
I think there's also a credit card nowadays where you get cash back too.
Yeah. And it's like,
So if,
yeah,
if you spend like $100, you get like 20 cents back or something.
I think people are worried about like, oh, but I don't want to pay for credit. Like you can be smart about finances, and like you can have no fee accounts. Like if you're paying for a checking or saving account, bro, like you're playing yourself. Like you there are so many no fee options. There's some like great like starter credit cards that are $0 a year, right? It's like you have no excuse to be not like maximizing utilizing banking services and stuff like that.
Like, to be honest, I think most of the people, I mean, I don't know, for me personally, I was scared to invest in any like financial instruments when I was younger because of the fact that I could lose money.
Yeah.
I think that's like a big portion, but as you kind of grow, you understand that it's okay to lose money, but like especially if it's investing, because that happens. But there's so much more benefits when you start investing early, right?
Yeah.
So I think just try everything early, and don't be lazy. I feel like a lot of students are just lazy to like look into these things.
Yeah.
But I mean, like I said, I was like that too. So
Facts.
yeah.
Facts.
Big facts.
So I guess just to keep the ball rolling with investments, like the goal for a lot of people is to, like once you start playing around with the stock market, building some savings, stuff like that, the next big investment appears to be real estate. That seems to be a booming market with, mortgage rates going down and stuff like that, and the housing prices going down with COVID.
Actually, to that point, the house and condo prices are actually going up because the rates are so low.
That's true. People are buying in right now. It's a good time to buy in.
Yeah.
This is not financial advice. I am a monkey. But what do you guys I know you guys are dabbling in real estate. What's going on with that?
Yeah, so I'm actually I'm in the middle of process of buying a place. It's
Ooh.
like investment, and I guess I get to live by myself downtown purposes.
Yeah.
But I think it's more so investment because it's such a good time to buy right now.
Mhm.
But this is my first time going into real estate, so it was very stressful, like trying to figure out what I need to know. So to kind of, I guess, share what I've learned until now is really do your research, obviously.
Yeah.
More specifically, like look into different types of mortgages, what different types of banks offer you, and what type of rates that they give you, and so that you could use it and kind of leverage it to other banks. And that itself is so much work. Like when my mom told me this, and like to start off mortgage searching, I didn't do it. I'm doing it like last minute,
Yeah.
but I'm realizing now that it's like hindsight's 2020 kind of thing. Like same thing with like, student loans and whatnot. But you should definitely do your research in mortgages, right? Find a good realtor, find a good lawyer with all the paperwork, because right now I'm trying to. Long story short, I'm trying to take over this assignment, but there's been issues with the legality aspect, so it might not fall through. But it's such a good opportunity that I'm still pushing for it. But we'll see how it goes. And another thing that I want to give, a tip that I want to give out is, it's gotta be super stressful to investing in real estate. So be prepared for that.
Yeah.
Be prepared to like research a lot and be stressed a lot, and things not going your way. Yeah.
Damn. No, it's good keeping it real though, right?
Yeah.
Like that's the reality of making large investments like this.
Yeah.
It'll be worth it down the road.
Yeah, I hope so. Holy shit! Like it's been so stressful this past 2 weeks because I've been going back and forth.
Thinking about too, right?
Yeah.
But
like I said, if it goes through, like it will be one of the best investments I ever had until now. I'll just put it.
These are your first big boy investments.
Yeah, I'll just put it that way.
Yeah.
I mean, it's in downtown, so it's gonna appreciate.
Yeah.
You know, it's a good location.
Yeah.
Hopefully.
Great location.
Yeah. It's cool though, because like you're investing in a condo that's already completed, ready to move in, right?
Yeah. So it's like
it's
almost like it's pretty much all built. We're just waiting for the occupancy date.
Right.
Yeah.
Yeah. Brian, you also have a pre-developed, right?
Yeah. I don't know. I don't know what useful information I can say other than it's like similar to Andrew's vibes. But I guess like for me, like I think one way of me being financially free is through real estate. But you have to be dabbing your feet in all different kinds of sources. So like real estate, the stock market, you also have your main income source, which is like from your job.
Mm-hmm.
And then, like side hobbies that I try to, monetize. Yeah. But I guess since we're in the topic of real estate, like obviously, the condo that I bought is a 1+ den. So I'm trying to hopefully flip the den into like another room.
Mm-hmm.
And then that way I could have tenant come in, and that could help, provide some kind of passive income every month. And that would help pay off my mortgage. And at the same time, what's good about real estate is that the house, which is not always the case, but if it's a good location, then the house is going to appreciate. But there's no way of guaranteeing that.
Yeah.
That's what me and Andrew is banking on, right? For having these real estate investments.
Mm-hmm.
For the most part, it does though. For the most part.
For the most part, yeah.
But just like the stock market,
it
can go down, it can go up. Yeah. Always risks.
But at the end of the day, I mean, if worst case scenario is like, well, I'll probably live there for a long time.
Exactly.
So,
let's get it.
That's the difference with, I think, investing in something like the stock market or like crypto or, Forex. like with stuff like that, it's not very tangible. With a house, it's a physical asset that's appreciating, right? And so, like you said, worst case scenario, you have a roof over your shoulder, over your head, you have a home, and I think that in itself is probably worth it, right?
Yeah.
But I always thought like, oh man, like if the house, like I don't know how I feel about living and paying rent. It's like, yeah, you are giving your money away, but actually, never mind, chop that out.
No, it's true though. Like
you're
I
chopping
think,
it out, sorry.
I think it's true though. It's like if you think about paying rent, you're literally covering someone else's mortgage, right?
Yeah.
So
Yeah.
if you have the capacity to buy a pre-develop or a condo or something, right, and you're able to rent that out to somebody at a price that can cover your mortgage, then you're literally just building your asset for free.
You're
right?
earning
Like
the
your mortgage is paying
appreciation.
itself. Exactly.
Yeah.
It's literally free money, which is why I think people started. I think a lot of people knew that already, and I obviously got on this late as well. But I think people are really starting to get that in the past 5-10 years. People in our age group. So I think that's why the housing market and investing in real estate has become such a thing now, where everyone's just trying to buy property and then rent it out and like Brian said, build that passive income, right?
Yeah. I think honestly, just our age group is at that point where
Yeah.
we're having these type of conversations, because I mean the ultimate goal is to make money, right?
For sure.
And I think real estate is the best way, passively at least, in my
Yeah.
opinion.
This is like one. I told you I read Rich Dad Poor Dad, and
Yes, Dad.
one of the things that really struck out was like you guys know like about the rat race.
The what?
You guys look
movie?
around, and then there's so many people working 9 to 5 that are living paycheck to paycheck.
That's me, bro.
Yeah.
That are slave to corporate life.
That's me, bro.
That's literally Andrew.
I mean that's us now. I mean it's inevitable that everyone has to go through that. But
Yeah.
do you really want to live that life forever?
No, of course not.
I'm actually pretty good with my life.
But forever, man, you don't want to be
What
slaving
do you
away
mean
like this.
forever? Like
Do
until
you want to work under a boss and living paycheck to paycheck, and a lot of people
Bro.
do that because they don't know how to manage their money, and
Yeah.
they don't know about positive cash flow, and they always buy stupid shit, buy luxuries that they really shouldn't afford.
Mm-hmm.
Oh,
And-
I see
and-
what you mean. Like people are spending their paycheck like stupidly.
Yeah.
Yeah, and then you're just stuck in
Yeah.
that rat race forever. You're just like a hamster
I see.
spinning on a
I
wheel.
see. Yeah, I mean,
Yeah.
And that's not what I want to do.
Yeah.
Well, I mean,
100%.
nothing is guaranteed about what's gonna happen in the future, but just being more aware of this and how can I save money?
Yeah.
How can I make more money? How can let my money work for me?
Yeah.
It's just you develop this mindset, and you try your best to figure out a way to get out of that trap and actually live life.
Yeah.
I mean, I agree with your points, Brian. I think that living life is subjective, and I think there are people that work 9 to 5 that don't spend on stupid shit, right? Like for example, I don't think I spend money on stupid shit, right? I think
Yeah.
I'm pretty financially literate, right? And I enjoy my 9 to 5 work, and I invest on other aspects where I could generate money. And I don't think working 9 to 5 until you retire is a bad thing necessarily. It's what you do with the money and what how you grow it and how you make passive income with that. Right?
Yeah, that's
Like
true.
9 to 5, the 9 to 5 job could be another source of passive income for you.
But I think at the end of the day, even if you like working at 9 to 5, I think the biggest thing about trying to reach financial freedom is the freedom, right? You can work and you can enjoy working, that's great, but not having that obligation, and you know what I mean, like not depending on that is, I think, what the point of what Brian is saying.
I see.
And I
Okay.
agree. But like Andrew said, like different strokes for different folks, right? Because for me, I might save and I might invest maybe 90% of what I make, right? And then 10%, yeah, I spend it on food. I spend it on drinking. I spend it on enjoying life, right? Because that's my way of balancing life. Doesn't work for everybody, but it works for me. And that's how I'm able to, justify putting so much of it away, is to like, I need something for myself as well. And so I think the important thing is finding what works for you, right? Everyone has different avenues. And the important thing is finding a way that works for you, but making sure that you're being smart about it, right?
Yeah.
Thinking of your future in mind and stuff
I
like
see.
that.
Okay, yeah, I understand. That makes sense.
Yes, sir.
Gotcha. Cool. Yeah, personal finance is super complicated. It's more complicated than people think, I think. That's why it's such a daunting subject.
Yeah.
So many
But
avenues.
you're still right.
Yeah.
Sorry, go ahead.
No, that's it. That was it.
Oh.
I think once you realize that, like, you actually want to strive to have a better life, like,
Yeah.
you're actually greedy to.
Yeah, greedy is
You
a good.
know.
I think it's a good word. Like you want to make more money. You should want to make more money and put in the time to do it.
Why not? Why
Yeah.
not? Why wouldn't you want to live a good, comfortable life?
Yeah,
Mhm.
exactly. Like our generation's so lazy. I feel like, I don't know, as technology gets better and whatnot, like we get lazier and lazier.
Yeah.
I feel like nowadays there's a lot more like financial advice. Like back like 4 years ago, I don't think I ever heard of Dave Ramsey or Stephen Graham, right? But
Yeah.
nowadays, all of these like new financial advisor in quotes are popping off YouTube. So
Yeah.
it's definitely a good time to start learning.
It's so easy. It's so easy to learn.
Mm-hmm.
Just hop on YouTube for like 10 minutes a day. You learn so much in a month if you do that. 10 minutes a day. Just watch one video a day.
Like, smash the like button
Yeah.
for the YouTube algorithm. You know the vibes.
Like our podcast, follow,
Yeah.
smash the like
For
button.
the
But
algorithm.
no, I think like what Andrew, what you said earlier, like really struck a chord. Like, we're at the age where, like, I don't know about you guys, but when I link up with homies and stuff now, it's like 50% of the time it's talking about stocks or investments. And like you said, maybe that's just the age range that we're in right now, right? Like, that's just where our interest is. That's where our like what we're
I think that's
thinking
fair.
about nowadays,
Yeah.
because
Yeah.
we're trying to set ourselves up for the next 5-10 years, right?
Mhm.
So
And I think Brian said, or maybe it was Josh, they sent like this post on from Instagram saying, if you're talking with your friends about not these, or maybe it was a post I just saw. Right?
I think
I
that was
know,
me.
I know what you
Yeah,
I
mean.
think that was
there's,
me, yeah.
it
Yeah.
said like if you're talking to your friends about like one night stands or like all these university topics, then
Yeah.
you have to like outgrow
You need
that.
new friends,
Yeah, you need new
or
friends.
something. Yeah. Half joke, half true.
Yeah, it's like I understand.
because I mean, like, we still talk about shit like that.
No,
Yeah,
but
that's
it's like
true.
naturally we tend to talk about stuff because
Yeah.
that's what interests us,
It's like
right?
it's like a real life shit now, We're not
Yeah.
gossiping anymore about like who we dated 10 years ago or 5 years ago and shit like that, or who's the cutest in the room.
I'm the
Yeah.
cutest in the room.
I'm the cutest in the
Sorry.
room. Bro.
Did you say?
Brian was like,
Yeah.
should we wrap it up?
I feel like
Yes,
Oh,
sir.
yeah.
What's up?
No, I was gonna put an ending sentence, but just saying
Yeah, yeah.
like if you guys want more detailed and specific topics, then let us know. Then we could get into it. I feel like we just kind of scratched the surface.
yeah.
Yeah, that's.
We haven't talked about TFSA RSP, but
Yeah.
I guess
I feel like
think that
I
next
feel
time.
like if the audience wants us to talk about it in depth more, then I'll be happy to. So
Yeah.
keep the comments, keep the DMs coming, guys.
that's when the podcast is done, when Andrew's voice goes up 10 octaves.
Hi,
Wait, Josh, go, yeah.
I just want to add in that, like, yeah, while we are, maybe a bit experienced, I would say we're still fairly entry level into the investment and, investment world and stuff like that. So we're just sharing from our perspectives. And again, take everything what we're saying with a grain of salt. Understand there are risks to everything. And again, do your due diligence, look into everything, read into it, get knowledged. You know what I'm saying?
Do research for sure. That's important.
Exactly. Exactly.
Yes, sir.
Make sure to DM us with any finance related questions or just questions in general. We're gonna obviously reply to every one of them. So, yeah.
Yes, sir. Follow us on Instagram at
the Young and Finch, YOUNG, you know the vibes. We're so close to 500 followers, bro.
Yeah, I think we should just announce. I think at 500 we're gonna reveal our faces. So keep the followings coming.
Yeah. Thanks again for the continued support. Don't forget to like the podcast, follow the podcast on Spotify, Apple Podcasts, Google Podcasts, and rate us. Give us a rating on iTunes Store if you like what you're listening to. It really helps support the team, and we really love seeing the feedback.
All right, guys. Start investing. Have a great week. See you guys next time. Peace.
Peace. Thanks for tuning into this week's podcast, this week's episode. This week we're going to be talking about something a little more. Oh shit!
아, 나 응애네.
Sorry.
잘하자고. 오, sorry.
I won a contest, bro. I won a contest for free wine. Anyway, sorry.